let's have you are welcome. We will be starting in 10 minutes. So make yourself comfortable, go and grab a coffee or a cup of tea and join us in 10 minutes. Morning, everybody. We will be starting in 5 minutes. Morning, everybody. We will be starting in 1 minute. I've been criticized for the choice of music this morning, so decided to stop it. If you've been with us for 10 minutes, it's a little bit repetitive. We might do a quick run of intro while we wait for a few more attendees to join. I am Clement Herry. I'm the Food and Grocery Director at IRI, and this morning I will take you through FMCG performance update for the first half of the year, or almost the first half of the year, 5 months of the year, and give you some really interesting cues and update on how we have managed as an industry to lap the COVID cliff that we've seen last year. I'll be also joined by Rex, who will take you through some of the key trends you can navigate in the next 6 to 12 months to make sure your business stay ahead. If you have any question, we will have the Q&A open, so feel free to just post your questions. We'll try as much as we can to answer them live as we go through the presentation. And if there is anything we haven't answered, you probably know where to find us. So please, we'll answer those after the meeting today. So it is 9:30, and let's be respectful for everybody that joined on time, and we have a packed agenda. So I am gonna kick off pretty rapidly and get into it now. So as we've discussed, welcome to the IRI FMCG performance trend for H1 2021. We are gonna have a pretty busy agenda, so that's always good. So today we'll talk a little bit about the overall sentiment post 2020 and how we're feeling as Australians. We'll go into the COVID cliff and understand how the retail landscape has changed in 2020 and which categories are benefiting from it in 2021. And also Rex will provide you a bit of a future outlook. What are the key trends that you can navigate and explore? So with no further ado, let's go into it. And, I think it's quite positive to look at the consumer sentiment index from, both Roy Morgan and Westpac and compare how are Australians feeling about themselves and their own economy. And, if you are familiar with those indexes, the questions is around how do you feel about your future as an Australian? What's really interesting is to compare the COVID-19 pandemic versus the GFC. And it took Australians almost 2 years to get back into a positive headspace during the GFC. Well, it took us just under a year to actually feel good about us again in the middle of the COVID-19 pandemic. And there is two factors for that. We look overseas and we feel really lucky to be in the country we're in today. I live in the eastern suburbs of Sydney, so I don't feel that lucky today, but that's okay. We know it's short and well managed, and we obviously can't complain compared to the rest. And there is really that sentiment that overall, we're seeing our economy rebounding really, really rapidly. So it is quite a positive momentum for us. And I think it's important to understand that your shoppers overall are in a positive headspace, because happy shoppers means that they're more willing to spend and invest some money. So today, it's not a lesson on economy. I'm sure you read the newspaper and understand what's happening. But if I was just to share 4 key metrics from a macro perspective and how it is impacting potentially your shoppers and you as businesses in the FMCG landscape, the first one is population growth. That population growth, we know, is a struggle in 2020. That number is usually around the 1.8% to 2% mark, which is roughly 450,000 new Australians every year in the country. Those are just more shoppers every year that can go and buy your products. 60% of that number used to be coming from immigration, which means people that can come with disposable income and already invest in our society. Obviously, the rest is coming from birth rates, and we know that kids don't buy things, but definitely cost you a lot more as parents. So with that number really slowing down, and you can see the quarterly growth is pretty much flat, which is just the birth rate, we are seeing some really struggle in terms of the unit growth that we're going to experience in the industry. So you're not going to have as much tourism, or no tourism pretty much for the rest of the year. That's almost a fact now. We're not going to have as many students. That's another fact. And on top of that, obviously, we don't have immigration. So really, the only growth you're going to get from units is just by generating more consumption. And therefore, you're going to start seeing more and more of the retailers pushing towards multi-buy, trying to fuel that consumption by the 245 or 246 as an example, moving away from the temporary price reduction, which kind of really reward buying one product at a cheap price. So on that note, we're going to start seeing also where we're seeing a lot of the retailers and suppliers looking at their performance versus 2 years ago to really understand where they are. The other number I want to talk about is the GDP, which is pretty much the health of the Australian economy. It's the sum of all the products and services sold in Australia versus last year. We know that in 2020, we went backward. Everybody has heard of the recession. But Australia was still one of the strongest economy in that landscape, one of the economy that declined by the least amount. And now we're already back in positive when you look at March 21 numbers, and that quarterly growth at 1.8% is actually really, really strong. And we probably can expect that number to remain relatively positive versus last year, which is a good sign. So what does that mean for us in the industry? We are seeing a strengthening of the Australian dollars, which means probably more affordable imports in terms of that currency exchange. We know there is a lot of issues at the moment with shipments and the like, but hopefully, that currency balances that cost of shipment. However, if you're exporting, your products are becoming more expensive and might, make your product a bit less attractive to foreign country. Plus, if you add to that the trade challenges with China at the moment, it is definitely a bit of a struggle. Now, from an unemployment perspective, that's a number probably that has surprised a lot of people. I'm just going to pause. It looks like my camera is blinking a bit, so I'm just going to open the curtain and see if it fixes anything. Bear with me. Pretty sunny in the east today. And then what we see is basically that unemployment number at 5.1% is actually ahead of what the Reserve Bank and the Treasurer were expecting to see the numbers at that time of the year, which now starts to create some different challenges around that skilled workers, and mostly in our industry, it is really hard at the moment to fill some of the vacant roles that we have as a result of that shortage of skilled worker. So basically, we are almost in an employee market at the moment, and we're going to likely see salary rising, as we haven't seen them last year moving too much because of the pandemic. We're going to see salary rising in 2021, which is going to put more disposable income in your shoppers' wallets and potentially fuel that next bucket, which is inflation. Inflation is the cost of life, the cost of stuff that you buy every day, if we put it very simply. And as a result of that, inflation is pretty low at the moment, 1.1%. Again, the RBA and the Treasurer would love to see that number in the vicinity of 2.4, and there is still room to grow there. Obviously, the next quarter of inflation is going to be likely higher than what we have seen to date, mostly driven by, last year, if you remember, during the pandemic, we didn't have to pay for childcare. Now we have to pay for childcare, and that's quite an expensive cost for most families. So we're going to see a natural inflation of the inflation number, or increase of the inflation number. So again, we're going to see that real value drive coming through. So really, this is it. From a summary perspective, really strong recovery from the Australian economy, but also just from an Australian perspective, we feel pretty good about where we are. Yeah, we're a little bit annoyed with the vaccine rollouts and with some of the lockdown that are happening. But again, we look across the world and we're like, wow, we're pretty lucky to be where we are. And for once in a very long time, Australia is actually going to lead the way and show other nations how a post-world with a post-pandemic world could look like. And a lot of the trends we're going to see in Australia are probably going to be 12 to 18 months away from a rest of the world perspective. So again, if you have any question, please put them in the Q&A. Rex will try to answer them as we go. Otherwise, I will attempt to do it. So if we speak about the COVID grocery cliff, and it is really a cliff because we've seen some gross numbers last year that we haven't seen them in decades in Australia. And now obviously you have to lap those gross numbers, the 30% that we saw last year. And obviously this is hard. And I'm sure you've looked at your own numbers and you've seen some big grains and big red, and how can you forecast what the demand is going to be. So let me start with the total Australia retail number. This is an Australia Bureau of Statistics number that includes all retail sales, including cafe, restaurants, department stores, food, grocery, hardware, white goods, and so on. This industry overall is a $362 billion industry. That's the left part of the slide. It grew by nearly 10% at 9.5%, which is nearly 5 times faster than what it grew the year before. And that's an incremental $31 billion to the Australian economy. So if you think about that GDP being, at 1%, that our industry, the retail industry, is definitely contributing a lot to that performance. $31.4 billion incremental dollars injected in the economy compared to $6.8 billion the year before. They are just amazing numbers. And if you look at the months-on-months performance, a lot of people would have thought, yeah, that was just a May, June, July. People were at home, so we're looking at that cocooning and buying new furnitures and stand-up desk and all those cool stuff that you need in your home. But beside April, where you had a lot of retail stores closed just because they were not essential services, what we've seen is an increase or an acceleration actually of that trend throughout the year. And if you think about the Christmas quarter, or the last 2 months of the year, November, December, 13% growth, 10% growth on the year before where we didn't have COVID. So, you're comparing pretty much 2 non-COVID periods. You did have a little bit of lockdown in the northern beaches of Sydney in December, but overall, those are extremely strong performance in a world where we didn't have tourism, we didn't have students, and we had limited population growth. So it's really fueled by domestic consumption and domestic growth. Just here, an interesting factor is that 13% in November, that's really highlighting the importance of Black Friday, or the critical role that Black Friday is now playing in our economy, becoming one of the biggest trading day in the year. And then the other interesting factor is, as we move further to the right, what we can see is obviously that March 21 at 2%, you are lapping 10% the year before. So we managed to grow on the top of what the retail industry has managed to grow on top of the 10% last year, an extra 2%. So really, really strong performance there. But what we see is the departments that are performing are changing. Obviously, March last year was purely driven by food retailing, grocery retailing. Well, obviously March 21, it's actually closing, it's cafe and restaurants bouncing back. And we're going to see in the next slide that food grocery is slightly down. And April is just astonishing, because you're lapping that -9% that we saw last year. A lot of stores were closed for part of that month. Obviously, they're not closed this year. So really, really strong performance. As I say, if you have to pick an industry to be part of in the middle of pandemic, I think you guys have picked the right one. Now, if we just take a look at, which department, which sectors fall under that, this is still an Australia Bureau of Statistics number. On the left side, you have food, and food accounts for about 40% of the total sales from a retail perspective. And you can see that M80 numbers to April, so 12 months to April, still growing at 9%, so really, really healthy. Then you have obviously that latest quarter, which is starting to lap the crazy purchase behavior we've seen last year at -2%. And then you can see across the other department, kind of that normalization of going back to our normal life. In that latest quarter to April, you have a lot of businesses that have gone back to physical offices, or being physically present in the office. And what you see as a result of that is some people have realized that they haven't bought clothes in 2020 because they spent most of 2020 at home. They haven't bought makeup or premium products in those department stores. And they might not even fit in their pants because they might have put a few extra COVID kilos. So we're seeing definitely the clothing and department stores really bouncing back, and the food service in the latest quarter, obviously driven by the fact that it was closed most of last year, or good part of that quarter last year. So again, overall, really strong performance in that latest quarter. 11% is quite phenomenal. So this is all good, but we work principally in that left part of the chart, in the food, in the grocery industry. So let's have a quick look at what that looks like. And what I wanted to do here is give you a feel for what 2020 was. So yes, it's a bit dated. But this is to give you a benchmark. If you were to look at your 2020 year, how did that compare to your performance and your sales? So in 2020, the packaged grocery, which is your total supermarket excluding fresh produces, grew by 9.4%. So, pretty much on par with the numbers we've seen from the ABS before. And that's a strong performance. If you remember 2019, we grew at about 2.8%, and that was a good year, value was hard to drive. And that's almost, 4 to 5 times faster in terms of that growth. Now, the number I want to highlight to you is the gap, or the discrepancy between value growth and volume growth. You're seeing that the unit growth is growing at 4.9 and the other one pretty much at 10. So you start having a discrepancy, and that population is really starting to take an impact. But there is also 3 factors that I want to highlight to you. The first one is during the first few months of the pandemic, you might remember, but we didn't really have much choice in which pack size we wanted to buy. Like, I have a family of 4. I would never buy a 5-kilo bag of rice on a normal, shopping behavior. But because during the pandemic, that was the only option, I did buy a 5-kilo bag of rice. So I bought 1 unit, but pay a lot more for it. So drove value ahead of units. And if you look at your own, toilet paper consumption last year during that April to June, you might just have gone for the 32 rolls compared to maybe your normal 6 or 12 rolls. So again, from a unit perspective, you haven't bought a lot more units, but you've paid just a lot more for it. So that's one factor. The second factor is during the 3 months post the pandemic, retailers did not promote as much. The game was not to promote, the game was to keep stock on shelf. So we've definitely seen value increasing in that perspective. And they've realized that they didn't need maybe to go back to the same 50%. So a lot of the 50% promotion went to 40% or even 30%. So obviously driving value ahead of units there. And the last point is us as shoppers, we couldn't go to cafe, restaurants and experiment those beautiful foods. So we tried to bring those premium or super premium food occasions at home. And then, every night became a bit of a big night in, mostly if you're in Victoria. And therefore you look at how do you indulge and how do you use food as a food for mood. And really, we've seen a lot of the premium and super premium segments really growing quite strongly. And what you can see is that trend in the latest quarter, so this is a quarter to the end of the year, is continuing, but we start to see that normalization. And we'll bring the next part of the section, which is going to be about more fresh data on packaged grocery. From a retail liquor perspective, just if you're interested in there, obviously on-premises venues were closed, so what we've seen is a lot of that consumption and purchase being reallocated to off-premise or in-home consumption, which is not a healthy thing for the economy and for the industry and for the Australians, because we know that it's a very anxious time and having people drinking at home is not the best thing for us. But you can see that normalization in the latest quarter to the end of the year, which is a little bit of premiumization, and that trends of Australian drinking probably a bit less, but better quality and a bit more premium products. So overall, that's probably where the sector is at that 2.1%. Petrol and convenience is a very interesting one, and the only one that is actually accelerating in the end of the year, and that's just a reflection of us not being able to travel internationally and discovering our beautiful backyard and being on the road in that latest quarter of the year and traveling for school holidays. So foot traffic definitely has increased, driving all the categories that are in the convenience space. And even from an MAT perspective, you might have thought that number should be red for 2020 because we didn't commute to work and so on. But what we're seeing is the tobacco shopper have used petrol and convenience station as a destination instead of going to the tobacconist. Or we've also everything that is take home size, your larger soft drinks bottles or your meal kits or toilet paper have grown significantly in petrol and convenience, but everything that is takeaway has declined as a lot of shoppers kind of used, again, petrol and convenience as top-up opportunities rather than going to the big stores. OTC pharmacy has been a real struggle in 2020. A lot of reasons for that. The Daigou, which is pretty much Australian shoppers buying infant formula and vitamins, shipping it to China, has pretty much stopped. The infant formula category is down 25% in that year in value terms. Again, that's not because we're making 25% less baby, but it's just that Daigou has stopped. We didn't really have a cough and cold season because everybody was at home and very sanitized. So cough and cold was one of the weakest seasons we've ever seen. So everybody's hoping for a good cough and cold season this year in the industry. And the last thing is a lot of the beauty purchases that usually would be done in pharmacy, around hair care, skincare, have actually been reallocated to grocery, because shoppers wanted to do one big trip rather than exposing themselves to multiple sites. So definitely a hard year for pharmacy. Now, as you see in many of those sectors now, we are seeing a lot of normalization. And it's really hard to forecast on the back of 2020 where we are going to land. So, those two familiar faces or friendly faces have come up and said, look, we will have to look at 2 years ago. No one has ever successfully lapped 30% growth. There is some good tailwinds in the industry, but we've never done that. So let's look at a 2-year performance. And that's what we're going to do for the next few slides, to give you a bit of benchmark of how healthy is our industry. Now, this is why we call it the COVID cliff. And if we focus our eyes on the middle part of the slide for a moment, it's a 4-weekly value growth. So it's basically saying that, in that quarter, that 4 weeks, 29th of March 20, that big peak that you can see, the total industry grew by 32%. We're talking about $120 billion industry in Australia, and that grew by 32%. So this is just phenomenal numbers. Obviously, as you lap the year, you can still see that performance hovering around the 10% mark, which is phenomenal. Like I've been 10 years in IRI, I've never seen a 10% growth. Even during the during the GFC, we were quite at the 8% on average growth, which was good numbers, but we haven't seen that for a very, very long time. And obviously, when you lap that in March 21, the industry dropped by 16.7%, which interesting factor is the 4 weeks after we went back flat, and now we are again at -1.7 at the end of May. So that's probably how we're gonna navigate the rest of the year. My assumption is we probably from now on are going to be just slightly above zero on average every 4 weeks. Units is probably going to struggle to remain above, because we did purchase a lot more. We did have a lot more in-home consumption because we were at home rather than buying in cafe and restaurants. So we're probably going to see really units struggling, and I wouldn't be surprised to see units going in the red a little bit further throughout the year. But overall, if we bring it back to the left part of that slide, we're seeing that MAT, so that 12 months to end of May, is still growing at nearly 6%, 5.7%, which is a really healthy number. That quarter at minus 6.5%. Again, it's just a reflection of lapping 32% the year before. There's no way we were ever going to do that as an industry. But overall, the positive message here is if you compare to 2019, so take that quarter and take that 4 weeks versus 2019, the industry is still growing at 10.2% versus 2 years ago. This is just a straight 21 versus 19. If you were to do a CAGR, a compound growth, you probably will be looking at 4.5% each year to get to where we are today, which is still ahead of the 2.8% we were experiencing in 2019. So really, really strong growth in that space. Now, everybody is interested about the share between Coles and Woolworths and who is winning. And we've seen that Woolworths has been winning and had the momentum coming into the pandemic and sustained that momentum during the pandemic. Now, the challenge for Woolworths is they had a really good post-pandemic period. So now they have to lap that growth. So you can see from an MAT perspective, Woolworths is still leading the charge with Coles quite behind. In that quarter, it's starting to close a little bit, with Coles being a little bit worse than Woolworths. But in that latest 4 weeks, we actually start to see Coles doing slightly better. And when I say slightly better, this is growth rate. So it's just comparing that 4 weeks versus 4 weeks a year ago. And Woolworths had a much stronger 4 weeks a year ago, which obviously lead to Woolworths being in red and Coles being in green. They're just lapping a little bit an easier 4 weeks last year than their competitor. But if you compare versus 2 years ago, those two guys are still growing 13% for Woolworths in that latest 4 weeks and 9% for Coles. So from a momentum and long-term perspective, Woolworths still has the edge. Yes, they're going to lose a bit of share in the latest 4 weeks, but nothing too dramatic in that space. So overall, quite fascinating charts in the middle to really look at it. It looks like a roller coaster. Now, this is the busiest slide you're going to see today, so bear with me and I'll take you through it with time. At the bottom, what we see is value growth for each of the quarter or each of the 12 weeks period that we have. So if I take an example on the, on the far left, you have the total store in that latest 12 weeks to the 23rd of May is declining at minus 6.6%. But you can see it is really that step down quarter on quarter as we are lapping the core of the crazy purchase behavior last year. So we're lapping that 32%. So it was expected. Now, what is really interesting, if you look across the board, and hopefully that gives you some good benchmark for your brands and your categories to understand how you're performing. Are you doing better than the average? If you're in the pantry space and your brands are declining 12% versus last year, you're actually doing much better than the overall pantry department. So hopefully that gives you a little bit of benchmark. But what's interesting here on the left side, you're starting to see, that fresh convenience, which is basically all your front of store ready to eat meals and stuff like that, your sushi, are really accelerating. And I think that's a reflection of Australian going slowly back to their normal life, being a little bit time poor again, being on the run a little bit more and back to the office. So using, instead of having that in-home occasion, having again the short side and having to go to a Woolworths Metro or Coles Local and buy a meal from them. And then you have those categories like beverages that have benefited a bit from COVID, but haven't really experienced the crazy growth that we have seen, pretty sustained growth. And you do have premiumization, you have larger multi-packs playing quite well in that space and overall sustaining that growth. So really, really interesting trends there. Now, as I said, we've actually updated that data yesterday. And if we were to look at the previous 4 weeks from a price perspective at the top, so at the top, we're looking at price per unit. Ideally, we would have loved to give you a price per kilos because it would have been a better representation, but it's really hard to compare a kilo of rice and a kilos of nappies. So units is the best proxy we have. And that line would have been entirely green in the 12 weeks to end of April. What we're seeing now is last year, as I said, per unit, we went to buy larger pack size, and we were willing to spend more because we just wanted to secure the products, whichever product was left on shelf. So now we're starting to see some categories that are going backward from price per units as shoppers are going back towards normal, more normal purchase behaviors. I'm going back to buying my 1 kilo bag of rice because it's back on stock, type of thing. So overall, we're actually seeing that inflation, or inflation for food and bev in the first macro slide I shared with you was 0.7%, and we're seeing that being quite aligned with the supermarket at 0.5% across the board. Now, the next point I want to talk about is that dollars per trip. So every time a shopper spend or buy that category, how much are they spending on that category per occasion versus the same quarter last year? And again, what we're seeing here is shoppers are shopping less often the store than they did last year. So they're a little bit more planned, and they put a little bit more product and spend on average a little bit more for across most categories. And that's really, really interesting because, in 2019, I was talking to you about, well, it's all about small trip and frequent trip. And that's how you're going to win. So, those convenient pack sizes are really important. Well, now what we're seeing is actually there is a lot more planned purchases, less frequency of visit, but larger basket size. So almost like going back 10 years when, my parents were used to do the big weekly grocery shopping. We're seeing more and more of the big weekly grocery shopping happening, mostly as people still work from home, so have slightly more time to think about what they do. But equally, when they purchase online, when you purchase online, it's a replenishment opportunity. So you actually think about all the things you need. You're not going to do a top-up shop online. It's pretty rare. So everybody is interested obviously I've spoken about Coles and Woolworths, and everybody's like, okay, but what about Aldi and what about Medcash? Medcash came quite strongly in the COVID period, reached almost that 10% share again. But what we're seeing is that the model has not really sustained. There's a couple of factors for that. I know Medcash might have some, different messages at the moment, but I think all the stores that have been refurbished that offers, your Romeo's, Food Hall, and all those premium stores are doing relatively well from a value and premiumization. But I think there's a lot of stores that haven't really done too much in terms of keeping up with the changes. And until Medcash and IG in particular have a solid online offering, those are just shoppers that they won't be able to attract. And as we've seen online accelerating, it is benefiting definitely Coles and Woolworths. From an Aldi perspective, I think, they've realized that they are at a risk. And I don't know if you've noticed, but they have launched their first self-checkout store in Darlinghurst, Sydney. And that's the first for Aldi in the world. And because they realize that here, people don't actually want to talk to the cashier and they want a quick transaction. So they're talking about potentially online coming at some point. Having that self-checkout is a huge opportunity for them, and they're trialing. And if it's working well, they will release that to the rest of their stores. And knowing that Aldi is a smaller square meters type of store, it is a good part of that real estate that needs to be allocated for the self-checkout. So it is a big investment for them. But from a Woolworths versus Coles, why is Woolworths winning? I think there's a lot of reason as to why. But if you go back to which type of activation do they do, it's all about attracting those middle families, the Discovery Garden, the Ushis, and it's all about instant gratification or rewards. My kids are pestering me to spend an extra $5 so they can get an extra Ushis when I go to Woolworths. They don't really pester me that much to get an extra points to buy knife in Coles at the moment. So there is obviously that aspect of I'm going to stretch my bill to be able to get 2 little plasticky things. Versus Coles, obviously, the last time that Coles won was when they did that little shop. That was the first collectible campaign that we had seen in a long time, and that had a huge success. The other part is around, obviously, the e-commerce platform. I think Woolworths has been much better with Cartology and Woolies X at creating that ecosystem. And Rex will talk to you a little bit about the ecosystem and the first mover advantage in the grocery space. And the other part is the customer first ranging. We know it is a headache for most of you to deal with Woolworths at the moment, and it's understanding all the different planograms. And as Brad Banducci said, the days of 100% distributions are gone. You're much better being 70% of our stores, but have a good assortment there than being in 100% of our stores. And that is really the targeting, is understanding that the store in North Queensland needs a different assortment than the store in Parramatta, Sydney, and having that right ethnic range as an example. So overall, Woolworths still has the right mix, in my opinion. Coles is starting a bit of a price war. You might have seen the kilo of drumstick at $4 on TV. But I don't think Woolworths will follow, because we've seen that actually from a shopper perspective, 75% of Australians claim that the COVID-19 crisis hasn't impacted their financials. 17% claim that it has impacted them negatively, and the rest are claiming that it has impacted them positively. So overall, we are really looking for value for money, and what value means to me might be very different than what it means to someone that has lost their job because of COVID. So, we are overall seeing that premiumization is working really, really well. Now, I just want to reinforce the trend that I shared with you. Here we are looking at trips. So in a quarter, how often shoppers are visiting the stores? What we can see is across the board, shoppers are visiting less often the stores than they did in the same quarter a year ago. And that again shows that we are putting slightly more in our basket, and we are also a little bit more planned, because overall we are spending slightly more every time we do so. So think about that assortment, think about maybe your larger pack size and how you can drive those larger pack size into store, because we are going to have more consumption at home. We are going to have more opportunities to create occasions and going outdoor as well. So if you play in that space and you can have the convenience and the value proposition of larger multi-packs, that is working quite well at the moment. As you can see from an Aldi and Super IG, I think Aldi at the moment is a little bit in a world of pain, because we are seeing shoppers wanting to do that full shop. They don't want to have to do a bit at Coles, a bit at Aldi. They want to do all their shopping in one retailers. And we know that the assortment of Aldi at the moment is still not quite there. You might need to top up with some other retailers. Plus, they've been struggling to bring special buys from overseas, therefore not really attracting that excitement for shoppers to come and go into their stores. Now, how can you keep your retailers entertained, or how can you get a good share of their airtime? So really, e-commerce is critical, and we're going to go through that. But e-commerce now is about 8% of total retail for grocery, which is a huge growth from, I remember 6-7 years ago, we were talking about 1.4 to 2%, and that number is accelerating. And we know, and Coles knows, that they probably are slightly behind Woolworths when it comes to the strategy there, and they will get there, but they won't get there until they finalize the distribution center with the Ocado partnership, which is, I think, aimed to be delivered in 2023. You will have seen in the news this week that Coles is talking about all the technology enhancement they are making to deliver the supermarket of the future, and obviously we have some good role to play in that space with the customer data. But overall, you're seeing the Coles Plus as a trial, try to do the Amazon Prime formula to really have a stopgap measure against Woolworths. Now, the other part is that customer-centric assortment. It's part of the Woolworths house, and we know it's really, really strong, and they're pushing for it. But if you can help Coles winning with middle families, and if you embrace that language with your CM or BCM, you're going to get some airtime, because they're going to want to hear from you. It's really that group of that family that Woolworths has identified that they are losing at the moment, and it's really important that you manage to support them in bringing those guys back in. The sustainability part, again, I'm pretty sure Coles and Woolworths would have talked to you about what are your plans. Make sure you are hyper proactive in that space. 2020 was supposed to be a sustainability year after the bushfire in 2019 and early 20. Unfortunately, the pandemic took over and no one cared too much about the environment, but we're going to see a lot of that coming back to front as we're trying to put the COVID behind us. And here is a good example of the Coles Moonee Ponds store, right? If you are Surf or Omo in that picture, well, you're definitely winning, because from an assortment perspective, it's going to be really hard to get a competitor in there. So again, if you can be on tap or refill, think about that. And the last part, we know the retailers are still very much caring about their own brand performance. What we're seeing in that space is Woolworths is now leading the charge, probably catching up on Coles. Coles has had much stronger years in private label, and brands are still performing quite strong, but Woolworths private label is kind of driving that growth. So With that in mind, I'm going to hand over to Rex, and I'm going to have a look at the Q&A and see if there is any.
Great, thank you, Clem. I get the fun job of talking to you about what's going to happen in the future and the themes that we are expecting to see to come through that will impact our industry's performance in 2021 and beyond. So, oh, the slides are just jumping around a little bit, so excuse me, bear with us. And now we're back on track. We're expecting to see 4 key themes that are coming through for 2021 that will underpin growth of our industry. Holistic health is not new, but we're expecting to see, and we'll have a separate webinar in the upcoming weeks to talk to you more about that. But the other 3 are mostly COVID related and driven. They're physical, digital, and social. So let's jump into the first theme, which is physical. And physical theme really refers to the physical presence of the shoppers. COVID has forced us to work from home. I'm working from home, Clem's working from home, and I trust that a lot of you are also dialing in from home this morning as well. In fact, we have now become a really mobile workforce, and what that means is a lot of people have moved away from where they currently live into regional areas, or maybe out of Sydney, Melbourne into other capital cities where housing is more affordable too. That's really seen in the regional housing prices growing at 5 times faster than that of capital city. All of that means that it creates challenges for retailers and suppliers like yourself, because what we know about demographics of regions and territories have actually changed quite a bit. So what used to work may no longer work, and the importance of customer first ranging program that Woolworths have championed for a long time is becoming more and more important for us. And the real opportunity for us is start engaging with Coles and start talking to them about it, so that so we can help them catch up to speed as well. And here is the next slide is a really good example of how we can partner with our customers to look at to help them understand the shift of regions and what we can do with it. We can see that on the left axis is changes in shop visits, and on the y-axis is essentially how strong is the brand performing in those regions. And we can see, and we've divided it into today's hero, tomorrow's focus, yesterday's hero, and maybe later. And really quickly, we can see that Melbourne, Sydney, and also Melbourne Southeast as well, losing shop visits, and where we are gaining shop visits are in the usual suspects: Newcastle, Townsville, Hunter Valley. I'm sure Byron Bay is probably here somewhere in hiding in the green charts as well. So then the suppliers can, our suppliers can really use this to identify where Coles is Coles stores are receiving more foot traffic, and they are also performing really strong in those regions. And then moving down to the yellow box, they can then identify where Coles have also received more foot traffic, but the brand is not performing as strong as we would expect. So then that will, so then we can start to unpack: is it a different range, different pack size mix that's required for these stores? So we can start talking about a true customer first ranging program. And the great thing about it is a lot of you that are subscribing to, most of you that are subscribing to Coles store level data already have store level data in as part of your subscription. So this is by no means a sales job, but it's merely a showcase of about what we can do when we partner with our customers creatively and start to unpack some of these industry-related issues. The next theme I'd love to talk to you about is digital. So COVID really has forced us to spend more time online. If you're like me, every night I would stream ABC News on iView, followed by 7:30 report. And afterwards, I would feel really bad about the world that we live in, the government that we have. So I would then try and pick myself up with a couple of comedies on Netflix. And I don't think my media consumption pattern is alone too. Speaking to my peers, a lot of people are also doing the same. Australia now are spending up to 6 hours and 13 minutes per day perusing online, and a lot of these, a lot of the increase have really gone to streaming service to make us self feel better, and also we're spending more time indoors as well. Gaming is also another really important part of our online existence. Gone are the days of a typical image of a nerdy gamer. I once upon a time was also a nerdy gamer. But gamers is basically everybody who has games on their phones, and the demographics of gamers are pretty much 50-50. Xbox launched a new console at the beginning of last year, and PlayStation launched PS5 at the end of last year, knowing that they will face major global challenge into stock supply well into 2022. Why? Why did they decide to do that? That's because they also want a piece of pie for the captive audience that is gaming, which is caused by people spending more time at home. We can't talk about digital without talking about e-commerce. And yes, we are all spending more and more time and money shopping online. In fact, when we look at a little bit closer to home to Woolies and Coles, we can see that Woolworths' e-commerce is worth 1.8 billion in the last year, whereas Coles is just slightly over $1 billion. Woolworths is growing at twice as fast as Coles. They're growing at 43% in FY20, and they're growing at 92% in H1. So they have actually picked up their pace this year as well. And the success of Woolworths in driving e-commerce sales really has come down to their ability to repivot their e-commerce strategy and push through programs and changes that would in 6 months' time for programs that would have otherwise taken them years to implement in a normal time. So being able to stay agile in such a testing time is really important for companies, and I think we can all do something a little bit. We can all do something to learn from that as well. In terms of where Woolworths sees how far e-commerce can go, we can actually dig a little bit deeper into their trading statements, and in the not so distant future, they're expecting the digital store visits to exceed that of a physical store visit, which is a very, very ambitious target. But for now, e-commerce role is to drive retailer loyalty, and it's a fantastic retailer loyalty building tool. When we look at how shoppers behave online, 65% repeat rates for those who shop online. So there's a high repeat rate for people that have trialed the e-commerce platform. 65 of them have gone back and shop again. So it's relatively high repeat rate, but only 22% of them would cross-shop Woolworths and Coles on an e-commerce platform versus, versus in the bricks and mortar world where we know that Woolworths shopper is also a Coles shopper. So there's really a first mover advantage for Woolworths and Coles to win their shoppers over. And naturally, the terms that we use, loyalty, conversion, is only going to become more and more so relevant in the online space too. And when we talk about online, when we talk about online game, the path to purchase online is very complex, if not more complex than that of an traditional in-store path to purchase. There are many touch points for us to consider, and if you are not considering them, we should definitely consider them. One of the most important elements for us to nail is our digital shelf. And you know, digital shelf talks to how well presented your products are in retailer store. Luckily, we have a great partner called Essential Edge that we work with to help improve your digital store. So if you're interested in this space, come and chat to us, and we'd love to tell you a little bit more about it. The next theme I would love to chat to you about is socializing in the age of COVID. Who would have thought that 18 months into the pandemic, we're still trying to navigate through all the social restrictions? In fact, COVID-19 has meant that there are less social gatherings. Try and talk to anyone that has planned a birthday party or a wedding in the last 18 months. You would know how challenging it is and how many delays we've had. But as human beings, we're genetically wired for connection and belonging. And I think I just directly quoted Brene Brown right there. But what that really means for us is we have fewer occasions to connect during the pandemic. But you know, when we do connect with people, they are more meaningful for us. And I think there is a great role for brand to play in social interactions during these testing times, to not only assert itself in these occasions, but also unlock incremental consumption occasions. So the next slide, we're talking about a very good example of how Coca-Cola partnered up with Coles. They created a landing page on Coles' e-commerce site, predominantly to showcase the range of their products. But they've also created a number of occasions, such as staying in, burger night, taco Tuesdays, all these fun, engaging and meal occasions with a social aspect to it, and strategically place the product into these occasions. There are also recommendations on, you know, what you need to buy for these product occasions. And I think that's a really prime example of how a brand can assert the influence into these social occasions and potentially unlock some incremental consumption occasions. The last thing I'm gonna talk to you about today, and we're only gonna touch on it really briefly because we have a separate webinar coming up, and that's on holistic health. I'm Chinese by birth, so in our culture, there's a saying, food is medicine, medicine is food. So we're no strangers to using food for its curative and preventative use to improve our overall health and well-being. But in the most recent years, we've also seen plant-based diet taking over the world. Every food supplier I've spoken to are working on how to capitalize on this trend. And that really also ties in the sustainability aspect of plant-based diet to create a really compelling proposition for customers. In Australia, I think we're slightly behind than the rest of the world. Markets like UK, US, they're really advanced into plant-based. So there are lots of lessons to be learned. So stay tuned on this topic. So we're coming to the end of this presentation now. But I'd like for us to all take a step back, close your eyes, and imagine, what life will be like in 12 months' time when we can all travel again and roam around the world again. What's life going to be like? And I don't think the new normal that we're going back to will be the same normal that we had, will be life as we had in 2019. A lot of the trends that we're seeing, that we're experiencing caused by COVID will still continue to exist. Working from home, for example, a lot of people, it'll continue to be featured in our corporate lives. And as a result of working from home, it unlocks more in-home consumption locations where we buy our coffee, where we buy our lunch, where we consume our lunch. It's going to be different. Our shopping habits have also changed too. We are increasing our adoption in e-commerce. The way that we entertain ourselves and our family have changed. We're relying more and more time, spending more and more time on streaming services. And a lot of us have also developed a health and sanitization habits too, such as mask wearing. In Asia, where a lot of my family live, they are very much used to going out and wearing masks in public transport, even before COVID-19 hit, because they lived through SARS and they know, they understand that it's a really important aspect of public health, public health measure. So, the new normal that we're going back to is not going to be life as it was in 2019. But in fact, I think if I was a betting man, I would think that it'll be a normalized level of where we are. So I'd like to close this section on 6 fruitful thoughts that I'd love to leave you with. Number 1 is create occasions. Think about, where your brand is currently targeting for in-home consumption occasions, or those precious social gathering moments. Number 2, use your Coles scan data subscription to really fine-tune your understanding into clusters. Speak to us. We can definitely help on that. Number 3 is sustainability. We spoke a lot about, Clem spoke a little bit about sustainability at the end of his section. And in fact, retailers are doubling down on sustainability. By 2025, where Woolworths and Coles are going to eliminate or minimize plastic packaging. So what is your brand, your category's sustainability proposition in that space? Let's be a leader, not a follower in this space. Number 4 is have a kick-ass omni-channel strategy. And we know that Woolworths have a very ambitious e-commerce target. And we also have opportunities to help Coles to catch up with Woolworths. So your conversation with your customers around loyalty conversion in the e-commerce space will be really welcomed. And more importantly, understand your digital shelves, how that's performing, and if you need help in that area, we can certainly help out in that aspect as well. Number 5 is to deliver value smartly by price pack architecture. Pricing should really be the last lever that we pull, but all too often we very easily pull that lever. So a more sustainable way to deliver great value is by making sure that we have the right mix of pack sizes to deliver value sustainably. And we can do that and we have the tools such as assortment optimization modeling tool to help you find the right mix of products and even down to the store cluster level as well. And the last point I would love to leave you with is stay on the pulse. We saw that how Woolworths really quickly pivoted their e-commerce strategy in 6 months' time to help really drive growth. So it really is those that are most agile and nimble gets to win at the end of the day. So I'm going to So this is the end of the presentation, and I think we have a few